It is every time.
Okay.
I want to keep doing it.
Keep doing that until it goes. All right, we are live. How is everybody doing today? Welcome to episode 16 of the FasterFreedom.
16? I didn't know that.
That's fast.
Yeah.
I know. We have a name now. I have on my sheet of paper to say whatever.
We have a portfolio of live streams.
LiveCast. FasterFreedom LiveCast is what we're calling this. My name is Primm. This is Bryan Schroeder. This is Lucas Walls. We are real estate investors. We eat, sleep, and drink real estate.
And we hungry.
Are you hungry or
starving?
You thirsty
I'm
too?
always starving. I'm
Yeah.
thirsty too, yeah.
If real estate came in beer cans, Lucas would drink a lot of that. He like real estate beer cans.
I'm probably better real estate then than I am now.
Correct. Awesome. Well, thank you for joining us. We are going to be talking today about real estate investing and taxes. We are not CPAs, we are not tax experts, but there are some key savings that you can get on your taxes by investing in real estate.
How do we make taxes exciting? How do we make it interesting, fun?
Maybe we all had those maggots we were talking about up here. We could do that maybe a little bit, but we'll make it fun, Bryan. You don't worry about that.
All right.
Don't you worry about that. You have all the answers to all my questions.
All right, you're the fun one.
Perfect.
So every time you say the word tax, take a drink?
Yes, perfect. You out there do that. It's 11:30. It's probably 5 o'clock somewhere.
Yeah.
So anyways, that's what we're discussing today. In this building that we're sitting at, we have 5 companies. One of them is Faster House. We buy 150 to 200 houses a year. The other one is Faster Funds Lending. They usually have about 10 million on the street. I would say we're the biggest, if not close to that, hard money lender in the St. Louis area. Probably have the most on the street. Magnolia, this is the second full year of the traditional brokerage. I think Matt's probably gonna do over 60 million.
60 million, that's a lot of sales.
A lot of sales for us.
Those Magnolia signs are all over the place.
They're crushing it. They're doing awesome. We also have True Title, who shares an office space with us, so a title company, so we're aware of everything that's going on through there. Also, make sure to comment in the comment section. Let us know where you're from. If you have any questions about real estate, let us know in there as well. Just put everything in there. We'll gladly answer all your questions, whether they're tax related or not. We are landlords as well. We have over 300 doors between the 3 of us up here, so we can pretty much answer, at least make up an answer to any question that you have about real estate. So
find the answer, not make up an answer.
well, I'll make up the answer and then we'll find it later if we don't know it.
Sometimes we do make up.
Yeah, sometimes we make up the answers. But
I'm from Defiance, by the way.
where did I say you're from?
You said tell us where you're from.
Oh, Luke's is from Defiance. Brian's from Iowa.
Garner, Iowa.
Garner, Iowa, and I am from good old St. Chuck. So anyway, so that's what we're going to be discussing today, and obviously this is coming to you through our education business, which is another platform we have to make sure and get out to as many people as we can about how to become financially free through real estate. There's Jen.
Hi, Jen.
I see the mouse. You took it. All right, how's it going, Alex? Thanks for saying what's up. We're going to be talking real estate taxes today. Nice to see you, Alex. You're on a lot, and we appreciate that. And then Jen is the queen of Section 8. So if you don't know Jennifer Donnelly, she is the queen of Section 8. She even has a T-shirt that says that. So contact her on Facebook or anywhere else. Ask her any questions about Section 8 because we don't know those answers. Yeah. But Jen does. So thanks for joining us, everybody. All right. So make sure to subscribe to our YouTube channel if you're watching through that. If you have not yet, if you're watching on one of our Facebook platforms, that's awesome. Thank you. Like and share, but also go to our YouTube channel and subscribe. I was just on the Morris Invest, Clayton Morris, who's a pretty well-known name in real estate. That just launched that podcast this morning, so go check that out there as well. So we are going to get started. First, we're going to talk about the market update, Bryan. So leads were down a little bit again this week, but talking to people around the country, leads are kind of down everywhere. Talking to a couple of the We Buy Houses franchise owners, their leads are down as well. So leads are just kind of down right now, but our buys are doing pretty good.
Buys are good. 5 buys last week, 4 sales. So I feel like a lot of investors out there are very positive, have a positive outlook on what the market's going to be, especially the landlords out there. So if we got a good landlord-friendly property, we can sell that one very easily.
How are leads down and buys up?
It's just
Networking.
Yeah.
Networking, and
Freaking awesome, isn't it?
And I think that the leads are super quality because the people that are like letting you in their house and reaching out and doing all that aren't as nervous about what's going on. But our network, we've had to focus on networking and buying houses without spending any marketing dollars through relationships. That's a huge focus for us here, and it should be for you if it's not. So that has definitely been doing well also. So awesome. So how has lending been? How's you guys?
Good. We did actually 2 really nice loans this week. unusual loans for us. We went
Kind
and
of
loaned
bridge
on
loans,
a
right?
mobile home park and a nice condo down the Lake of the Ozarks, which we don't normally do, but those are both pretty good sized loans. So we got some loans, money on the street up.
And I think you've got approved 6 loans each of the last 2 weeks, which is good.
Yeah.
How about rentals? I think we are sitting at 100% occupancy right now. Out of our 115 doors, all 115 are occupied right now.
That's freaking amazing.
We have one that's not, but I think it approved that for St. Ambrose.
Okay, yeah.
Yep. But what about you guys, Brian?
We have one that, unfortunately, one of our tenants passed away. It's weird. We've had 3 this year. So very strange. Not from COVID either, just for whatever reasons, you know. So we have one person one that's vacant out of 126, or 124. So that's great.
Yeah.
I love that.
Yeah, occupancy is high, and we're also getting rent, so that's a good thing.
The rental business is good this year.
It is.
It's a good year to be in the rental business, especially single. I don't know. You guys got apartments. I always think single family because that's what I do. But you guys got apartments.
Single families are doing better than the apartments right now.
The apartment's still not doing bad. Everything's doing pretty darn good in the entire real estate industry right now, I think, as far as our area and most areas.
Residential.
Yeah.
Stay away from the
Yes.
strip centers.
Yeah, maybe more of the the commercial size or retail size will maybe struggle a little bit. But as far as where people live, all that real estate's doing good.
I feel short next to you guys. I don't know what the deal is
Well,
here.
Lucas is on a higher chair.
I have a higher chair. I'm kind of trying to scoop down, but it's not
Making
working.
noise. It's the first time he's ever been taller in his life. All right, great question. Do you own or do you landlord properties in South Carolina, 12-unit townhome apartments all occupied? We do not. We do not. Sorry.
His name is Brandon too, by the way.
Brandon, yeah, thanks for the question, Brandon. No, we do not. We only manage our properties. We've actually just joined property management companies. Just merged at Greater STL Rentals recently, so we're gonna have one company managing all our portfolio and Bryan's portfolio as well. So right now, we're just gonna be managing our properties. So
In St. Louis. So yeah, we just do the St. Louis area. That's all we know.
Yeah, that's all we know.
You wouldn't want us to manage your South Carolina properties. We'd do a crappy job.
Yes, we're good at managing ourselves only because it's far away, not because
That's right.
Yeah.
But if you're looking to buy those type of properties, looking to sell them, you know, get on some of the national Facebook investing groups and throw them on there. Hopefully, and get rid of those.
Yeah, for sure. For sure. All right. Well, we are going to, if I remember how to do this, we're going to add to the stream. What?
My goodness,
That is.
I look high.
You do look high.
That is Lucas.
The night before.
I wasn't high. I was obviously playing basketball.
If you didn't know, Lucas played basketball in college, and he was the number 50. I don't think I've ever seen the number 50 in basketball.
Especially like a guard. I was
Yeah.
a guard. That's usually like a sitter's number.
Or nobody's number, but yes.
So where are the miners at? What, I don't know what team that is.
It's Rolla.
Okay.
So they've now since changed the name. They changed the name the first year I was there to Missouri University of Science and Technology, but they are still the Miners.
All
There
right.
you go.
There's some old school jerseys right there.
Gotta get as embarrassing picture as I can of these guys. So, remove. All right, we'll get us back going. All right, so we are going to be talking tax benefits of real estate investing. We are not CPAs, but we know the tax benefits of real estate investing. We can't give you specific advice on what to exactly do, but we know the benefits of real estate investing, and we are going to come out swinging. We're going to come out with my favorite one and the best one. Do you know what that one is, guys?
I don't.
It is. I have to turn over my sheet of paper.
You forgot?
Tax-free borrowing. So when you refinance a property, it's tax-free. Lucas and I, in April, refinanced our entire portfolio and pulled out $880,000. We have a YouTube video on that, so if you haven't gone to our YouTube channel and check that out, it's on there. We can maybe post a link to it there in the comments. But tax-free borrowing, we took a check or 3 checks that totaled $880,000, and we're not going to have to pay a dime in tax on that at the end of the year.
Yeah, and I know this is about saving money on taxes and keeping more of that money in your pocket and not paying the government. But the reason we were able to do this is it's simple. We started buying rental properties 5 years ago. That's it. And then we paid down that note by the income that we're receiving from our tenants, and those houses appreciated, which caused a spread in our loan to value. So we had a loan to value of about 65%. We took that up to about 75%, took out $180,000 tax free, and then $880,000 tax free. And geez,
Where'd that 700 grand go?
And then increased our cash flow about $6,000 a month with increasing our loan balance, because we had better terms. We went from about a 5-6% at 20-25 years to 4.5% 30 years.
So if you've ever done a refinance and pulled out some tax-free money, let us know about it. Put it in the comments. Let us know what the deal was and where it was and how much you pulled out. So I know you've done probably a couple hundred, if not more, bird deals where you have that opportunity to refinance, and you also refinance your portfolio quite often to raise your loan on certain properties to get some money out to pay off other properties. So you kind of want to talk about that and how you take advantage of that tax-free money and how you do that.
Yeah, it's one of the beautiful things, just to follow up on you guys, you had $880,000, you put it in your pocket, and you didn't have, normally if you make 880 grand, what do you give? A couple $100 grand to the government, right? Yeah. In this scenario, you don't. Now, you're deferring it to someday down the road. You'll have to pay tax whenever you sell, but that could be, who knows, might keep the rest of your life, never sell.
Mm-hmm, exactly, and at that point, hopefully our income is increasing, so then it's not as big a deal to have to pay some tax.
Yeah, the wonderful thing about, I'm sorry, I'm not answering your question.
You're not, it's okay, that's all right.
The wonderful thing about that is you guys can, over the next 10 years, allow your tenants to pay those mortgages down again, and they'll appreciate, your properties will probably appreciate again.
Over time, hopefully, yeah.
And maybe 5 or 10 years down the road, you take out another 800,000.
Right.
That's the magic, the beauty of
tax-free.
Tax-free
is the key to this.
That's true.
Yeah, you're not paying taxes on it. If we're ever to collect a check for 880 grand from anything else I can think of, from the stock market, from your 401k, from any, I guess has some tax benefits, 401k, but you have to pay taxes on that.
And I guess to add just a little bit to that is, money is cheap right now. Yeah. You guys got an awesome interest rate on that. Yeah. It's not like you're paying down those mortgages again with your own money. Your tenants are paying down those mortgages, so it's just a beautiful thing.
Yeah.
So you answer my
question. I can see
now?
why that's your favorite, and I forgot what the question was.
All right. So Bryan does a really unique thing with his, and this is more of just moving equity around to pay off properties, have it free and clear to do. He pays off his rentals, owns them free and clear, then takes a line of credit out on that to do things with. But that's not.
I remember the question now.
But, the question is, because you do quite a bit of refinancing and pulling money out to do other things with it, but it's all tax-free when you do that.
I do. I like the strategy of figuring out how to maximize your income on things. So one of the things that I do with my rental portfolio is I try to, whenever we're paying down a mortgage, and you get like Lucas was talking about with LTVs, whenever you get to like 50% LTV, where you got kind of like some dead money in there. So I always like to either refinance them back to 80% LTV or pay them off. And so I can get as many paid off houses as possible. And then I put lines of credit on those paid off houses, and I use that money for other things. One of the things we use it for is our hard money lending business. But we also use it in our flipping business a little bit for our rehab, and it's just money you can write a check on at any time. You're not paying interest on it while it's just sitting there. So I like to do that. I like to have my portfolio either leveraged 80% or paid off, and the paid off ones I just put lines of credit on them, and I use them when I got opportunities to use it.
So there's two great things about refinancing a rental property to me. So say you own a property for 5 years, and you want to do something with that equity that's in there. You could sell it.
Yep.
And but you're going to pay taxes on it when you sell it. The good news is they're only capital gains and not ordinary income. But we'll get to that.
Stop it.
So instead of selling it to do something with that money, refinance it. Not only is it tax free, but you get to keep the house as an asset.
Yes. Tax free money, and you get to keep your asset.
Yeah.
We love assets, don't we?
Yeah. So I get it a lot. There's some haters or trolls on TikTok. You guys didn't know that? So I started a TikTok account.
You mean the teenage girls are trolling?
Stop it. They're grown men, Bryan. I see their pictures. But anyways, people say, you don't own the property. You can't do anything with the equity. It's kind of that kind of thing. When I talk about what we're doing and what we have, but you can do stuff with the equity. It's not worth me responding on TikTok, but you can.
Not every time.
Not every time. Sometimes I get a little feisty and go at it a little bit. But anyways, yeah, there's that equity. You can use that equity. It's not just like you call it debt equity. You're just not using. If you have $8 million rental portfolio and you owe $5 million, that's $3 million of equity that it's just sitting there. You can't do anything with it unless you pull out lines of credit or refinance or do things. And we all would refinance if our goal is not to pay off, or to pay off, you can refinance, and it's tax free.
Yeah.
So anything else on the best and our favoriteest? That's a word.
I don't think that's my favorite. That's your favorite.
That's your favorite?
It's a good one. I like all these.
All right.
Depreciation is pretty sweet too.
You're getting ahead.
Where are we going next?
All right, so that was number one. So number two, the number one is tax-free borrowing. You refinance and not pay any taxes immediately on the money you gain.
Want to go to this one just because it's kind of a decent segue.
Perfect. All right, number two is capital gains rate. So do you kind of, which one do you want? Do you want to lay that one out there a little bit, or?
Yeah, I'll give it a go. Obviously, Bryan is our local tax expert.
Bryan, correct what he says.
All right. Because this isn't my favorite. This is a good one, but it's not my favorite.
It's not my favorite either. But it's cool. So if you own a rental property for over a year and you sell it, the money that you make is not taxed as ordinary income, which is usually, 30 to 40%, depending on how much income is on your tax return. It's taxed at a much lower percentage, usually 10 to 15% lower, and that's called the capital gains rates, capital gains tax rates. I think right now, what is that, like 20% or something like that?
It's depending on how much you're making. It's either at 15% or 20%.
Okay, cool. So so if you can't refi or don't want to refi and you want to sell it, you're going to be taxed a lot less than you normally would by just making that money somewhere else.
So basically, I'll toss it over to Bryan. These guys just did an awesome webinar on, there were 6 or 7 benefits of tax benefits of real estate. We're only going to talk about 3 plus a bonus today, but they just did it on our webinar. So if you have any questions or if you have any interest in joining our weekly live webinar, go to FasterFreedom.com/webinar. But basically, you're getting income through multiple sources, and if one of those is real estate and you hold it long enough, you pay less taxes if you're owning it longer for the capital gains rates. You kind of want to correct what Lucas said at all?
No, that's pretty much it. The cap gains, the simple thing to know is ordinary income is where you work at a job or you're self-employed or whatever, and you make money, and whatever your tax return says at the end of the year, you're paying ordinary income tax, federal taxes at a rate, and it's determined by how much you're making. Capital gains is where you own an asset, you own it for more than a year, you sell it, you do owe taxes on that gain, but that tax rate is less than the ordinary income tax rate. So cap gains rates are better than ordinary income rates.
Yeah, I think something to clarify here is this is on investment properties. If this is your personal primary residence, you don't pay any taxes up to a certain point.
I think,
Good clarification.
Yeah.
Rachel's sitting right here. Rachel's getting ready to sell her personal house. She bought it a few years ago, rehabbed it, bought it at a great discount, rehabbed it, moved into it, lived there 2.5 years. She's putting it up for sale because she's buying a nicer house. And whatever her profits are on that, 0 tax.
Up to a lot. What's the?
That's 500
grand.
I think it's 250 for one person, 500 for a married couple, and then you have to live there 2 years. So I'm pretty sure it's the rule.
If it's your
If
personal.
it's your primary residence.
Yeah.
So basically, there's a lot of tax benefits. Before we get into the number 3, which apparently is Bryan's favorite, there's a lot of tax benefits of real estate. It's pretty hard to reduce your income to 0 for the short term and long term. That's there's a lot of different things people do, but real estate is just so powerful to reduce that, what you're going to pay on taxes through. One of the main ones is Bryan's favorite, which is number 3, depreciation.
Depreciation. So it's easier to show depreciation
With
than
your
to talk about it.
Here, show 'em with your hand.
I'm going to show it with my hands.
Do it.
All right, so simple. The government, if you own a rental property, and we're talking about single family rentals or residential apartments here. Let's just stick with single families. Residential apartments gets into commercial too.
Yeah.
So single family here, you can depreciate that asset over 27.5 years, and just kind of talk through how that works once. I showed an example yesterday on our webinar of buying a house for $120,000. And then you got to subtract out the land, and let's just say, for simplicity here, the land's worth $20,000. So that value of that property, the real property, the house, is $100,000. Now you depreciate that $100,000 over 27.5 years. That turns out to be $3,600 a year. So you can take that whatever your income was on your tax return that year, you can reduce it by $3,600 or the amount of the depreciation for that house. And not only for this year, for the next 27 years. So I showed a simple example yesterday on our webinar where if you're you in your regular job make $72,000 a year. If you own 20 of those houses, that's 20 houses where you're depreciating $3,600 per year per house. That turns out to be $72,000 worth of depreciation. So you can literally pay zero tax on your $70,000 income if you own 20 houses worth 120. Well, that you purchased for 120,000.
Yeah. So you probably have a little bit coming out of your biweekly check, just like normal, but at the end of the year, you'd have a fat refund.
Fat refund.
Not a skinny one?
Yeah.
Like a fat one?
Or when I first started this business, it was Jim and I. It was Jim and I had a truck. We made our living off of buying houses, rehabbing, reselling them. That was what we called our flipping business. And then we built up a portfolio of rentals. And for years, we didn't pay any taxes because we were making money on our flipping business, but we had so much, we were depreciating off of our rental portfolio that we didn't pay taxes for years. But we were still making a good living off of our flipping business.
Jim and I in a truck. I think that should be the name of your book.
Jim and I in a truck.
I like it. So theoretically, tell me if I'm wrong on this one because I was not in the tax benefit webinar, and this is the not the expertise. I wasn't in here. I listened to some of it, but anyways. So if you have that exact
problem, you were making TikTok videos during our webinar.
I do those sometimes. So on that example of they've been able to depreciate $3,600 a year. So if you're making $300 a month income from the property,
yeah,
that's $3,600 for the year. So then you literally pay $0 on the income you're producing from that property. Is that correct?
That's a great way to look at it.
So if you have those numbers work out, you can make $300 net profit from that house a month, and you're depreciating $300 from that month. So that is just free money, or not free money, but no tax on that income.
Yeah.
Does that make sense?
Another way to say that is if you had 20 houses that each one cash flow $300 a month, that would be $6,000 a month in cash flow, which turns out to be $70,000 a year in income, right? Mm-hmm. Cash flow. You're depreciating it at that same amount, so you could actually live off your cash flow and pay no taxes.
Right. That is awesome.
And it's all a paper loss. It's not any less money in your pocket. It's just on your tax returns.
Yeah. It's awesome.
Depreciation is a beautiful thing. Talk to your CPA about it.
Talk to your CPA about the specifics of it. But if you have any questions or if you've done some depreciation, give us an example. I just said earlier, if you have done any tax-free borrowing, any refinances on your properties, on your rental properties, your investment properties, let us know also. But if you've done any depreciation, we got a great question here coming from Alex. So make sure to ask any questions on taxes with real estate. We'll try to answer them, or any questions on real estate in general. So Alex's question is, are there any tax benefits for buying rental properties under your name versus a company or an LLC?
It doesn't matter if it's in your name or if it's in a company. Either way, it's going to flow through to your personal tax return. So if it's in your name, it's probably just going to show up right there on your 1040 tax return. If it's in an LLC, your LLC is going to file a tax return, but then I think they call it a K1. There's a K1 for the tax return that just goes right over to your personal return. So bottom line, it's going to end up in the same place. It's going to end up on your personal return. So doesn't make a difference.
So for taxes, it doesn't make a difference, but we all still own our properties in LLCs for sure. Protection and
asset protection
to protect us.
And ease of bookkeeping and reasons like that.
We still own them in LLCs, but if you own personally, the tax benefits, I didn't know the answer to that. That doesn't really matter. So, but
you clarified it well.
Yeah, but
I'm glad you said that.
But we suggest owning them in LLCs.
You know, before when Sam told me what we were talking about today, I thought I would just go look up how much I had in depreciation last year, and I had $283,000 in depreciation last year. So I could have made $283,000 and not paid any taxes whatsoever. So that's a real life example there, man.
But you pay taxes,
which is a good thing.
Yeah,
I'm happy.
Yes, we don't.
We don't not pay taxes.
No,
any of us. We're just trying to get our effective rate or effective percentage as low as possible. And I think we did a good job of that because we own real estate. I think think I was at like 13% of our income is paid for taxes, and Sam was at 11%, I think. And then I don't know if you know your effective tax rate for 2019, Brian, but
I think it was around 20%.
much lower because we own real estate than if we didn't.
Yeah, and I almost feel like it's our responsibility to pay taxes to some level or some degree. Everybody needs to pay taxes to make the government and everything work. We just don't want to pay too much in taxes. We don't want to give more than we should or feel like we should. So we're always trying to reduce that that amount of tax we pay every year, but we're still paying it, and we're happy to pay it.
And we're paying it at the right time of our career. Brian said once he started, he didn't pay taxes for years, and that's because you're not making a lot of money, number one, and you have a lot of expenses. And but once you get more stabilized and have a more mature portfolio, you're gonna have to pay some taxes.
For sure. So got a question up there coming from inside. Probably Yates put that up there. So we talked about my favorite tax benefit, or that was Rachel apparently. My favorite tax benefit is refinancing. Lucas didn't tell us his favorite. Brian's is depreciation. What's your favorite?
I don't think I have a favorite, guys.
He loves them all. All right. So if you have a favorite, let us know. If it's one of the three we talked about, we got a bonus one coming here in a second. But if it's one of the three that we talked about, let us know what it is and why. And if it's a different one, let us know that, and we can try commenting on that and adding some flavor to that as well. So the bonus one we're going to go over is no self-employment tax on rental income. So do you kind of want to explain that while I read this note that just handed to me?
Yeah, I'm curious about the notice. That's exciting that you're getting handed notes in the middle of the live stream.
I'm not showing you.
So for anybody out there that's a business owner, or if you're just an employee for a business, you probably have heard of either the FICA tax or the self-employment tax, which is basically the same thing. It just depends on if you're the employee or the employer. But so just anybody that's out there that's gotten a check before from their employer, there's probably a line item on your check for FICA, and it's usually about 7.5% for the employee and about 7.5% from the owner. So, and if you're just a self-employed individual, like just say you're somebody that goes out and flips houses for a living, and you don't have any employees, the first thing that you pay on your income is going to be self-employment tax, and it's 15% of what your net income is.
Because you don't have an employer, so you're taking the employer side and the employee side, combining it, and have to pay the whole thing.
You got to pay the whole thing as a self-employed individual. But there's a benefit for I don't know who comes up with all the tax laws, all those senators and congressmen that get together and so forth. But for whatever reason, they decided that there is no self-employment tax on cash flow from rental income. So it's a huge savings. So if you got, like we talked about that previous example, if you had 20 houses that each cash flow $300 a year, what was that, like $70,000 a year? You don't have to pay any self-employment tax on that. There's no self-employment tax on cash flow from rental income.
It's awesome.
Yes. That's a bonus bit. That's a bonus.
It's a bonus. I like it.
Pro tip,
bonus tip. All right. So a great question from Ray, which was what was handed to me, but we'll let you read it here. So thanks for all the content putting out. We appreciate that, Ray. Hopefully you're subscribed. Share it with all your friends if you have not already. So you've heard about accelerated depreciation. Is this a tool that you can use to take depreciation over a shorter period of time? I'll let Brian kind of get into that. But yes, that's what accelerated depreciation. In another life, earlier life, I used to sell construction equipment. And then at the end of the year, there always seemed to be a new tax law that got pushed towards the end of the year that would allow you to depreciate 100% of that asset or 50% of that asset. We're talking about construction equipment. So that is what accelerated depreciation. It lets you not depreciate it over 27 years. It lets you depreciate it over a year. So can you kind of talk to that? How that pertains to real estate?
I can talk to it a little bit. I can't say that I'm an expert on this. Our controller here and our CPA pretty much do all this for us, but I know there's a lot of things you can take accelerated depreciation on. Didn't want to get into that too much here because I honestly don't know what they all are, but I think there's limits, like I know one thing that we take accelerated depreciation on every time we replace a furnace and air conditioner, because it falls underneath a certain limit, we can write the whole thing off in year one. But I don't know the rules well enough to explain them all, but we definitely take accelerated depreciation when we can.
I'm pretty sure you can't take it on the house,
Right.
You know,
certain items.
Certain items, not the, you still depreciate the real property over the 27 years. I don't think there's anything that's come out that says you can appreciate that whole house over that period of time. But
Isn't there something that came out or something that we almost tried to implement in the past year or two on newer rentals that we were buying?
Cost segregation.
Cost segregation,
Yeah.
is that similar?
Yeah, that's a form of accelerated depreciation. Okay. I don't know enough about it to explain it on a webinar, on a live stream here.
You're live, Bryan.
I know it's out there, and I know enough about it to know a little bit about it, but not enough to explain it. But bottom line is, we definitely take accelerated depreciation when it makes sense.
Yep.
And we just, honestly, Sam and Lucas and I aren't the ones that are doing that. It's our CPA. So you get make sure that you're working with a CPA that knows real estate investing, rental property, and somebody you trust, similar values, that type of thing.
And it's not cheap for a good real estate investing CPA, but it is worth it, I promise.
Yeah, shout out Cindy Ray. She's all of our CPAs. She does an awesome job. She helps us save tax as much as we can. So let's go ahead here really quick and
do we got a Facebook user out there that says?
Oh gosh, so there you go.
That's what I do that day. What? I must have cut the grass or something.
Yeah. You're
working hard.
You need a glass of water,
Where
Bryan.
did you get that picture?
It's on Facebook. So we do our best. That's from 2012. We do our best to embarrass everybody as best we can. Lucas was either really sick or tired or hungover,
I just think it was a bad picture.
Yeah, it was something. But anyways, here's Bryan. Smile. Look at that smiling guy. So yeah, I figured that. So that is a funny picture of Bryan. So let's get back to the main screen. All righty. So that was real estate. I'm wearing the same shirt as Sam today. Awesome.
Sean.
Yeah, Sean, for sure. So
shout out to Angle Ridge Remodeling.
yes, for sure. Well, thanks for tuning in today. We're going to have to do this again next week, 11:30. Don't know exactly what we're going to talk about, but we're going to talk about something
It'll be fun.
interesting and exciting to do with real estate investing. So appreciate you guys watching. Make sure to like this video if you haven't yet, and share this video on Facebook or YouTube. Subscribe to our YouTube as well, and head over to FasterFreedom.com to see all the things that we do to teach others to become financially free through real estate. So good having you. Luke's going to give us a peace sign. Bryan, can you do